Hey, it is Troy Stavros with Cornerstone Realty Associates, and it is time for our monthly market update, looking at all the data through the end of March and seeing what is happening in the real estate market in Knoxville and East Tennessee as a whole. Let's jump in and take a look. Okay, looking at East Tennessee's housing market comparing March of 2025 to March of 2024, home sales are down 10.2%. The inventory of homes is up 31.6%. New listings are up 14.7%. So between inventory and new listings being up, you can see there's quite a few more options for buyers out there. So that's good news for them. Pending sales are up 10%. The median sales price in East Tennessee as a whole is up 7.42%, coming in at $375,975, with the average sold price per square foot coming in at $244 per square foot. And the absorption rate is up just a tick, coming in at 3.72 months worth of inventory versus 3.67 last month. That means inventory is up and demand may be down just a hair. Let's take a look at the data lines for East Tennessee and see what that tells us. So this is providing us insights into the single-family housing market in East Tennessee, focusing on metrics such as the number of listings, pricing trends, absorption rates, days on the market, sold to list price ratios, and price volume. So let's take a look and see what's going on. As far as the number of listings, the active inventory has steadily increased, peaking near the end of 2024 and stabilizing at around 6,000 listings by March of 2025. So this represents an increase in supply compared to the previous year. We saw that in the data card earlier. Now, new listings have remained relatively constant, averaging around 1,500 to 2,000 new listings per month in East Tennessee, which indicates a stable influx of properties into the market. As far as pended and sold listings, both pended and sold listings have remained flat, suggesting that demand has not kept pace with the growing inventory. So the implications there for sellers is with inventory increasing, competition is intensifying, which may require strategic pricing and marketing to attract buyers. Now, for buyers, they have more options available, which could strengthen their negotiating position. Let's take a look at listing prices and sale prices. The median list price has seen a minor increase from $430,000 in March of 2024 to $439,000 in March of 2025. That's up 2.09%. However, the growth has been modest, reflecting a stabilizing market in East Tennessee. Now, the median sales price has increased from $350,000 to $375,000. That's up 7.14%. And that indicates that while list prices are relatively stable, buyers are still willing to pay more for quality properties. Now, the average sale price has risen 5.68% from $416,442 to $440,103, further supporting the trend of a rising buyer spending. So the implications here, looking at listing and sale prices for sellers, is that they can expect higher sale prices, but the modest increase in list prices suggests that they should avoid overpricing as buyers remain price sensitive. Now, for buyers, it's telling us that while sales prices are increasing, they're still relatively affordable compared to national trends, so that makes East Tennessee an attractive market. When we look at the absorption rate has risen from 2.9 months in March of 2024 to 3.76 months in March of 2025. That is up 29.21%. This reflects a shift towards a more balanced market, though it still slightly favors buyers. Now, the implications here are that homes are taking longer to sell, so sellers may need to adjust their expectations and consider incentives to attract buyers. Now, for buyers, they may have more time to make a decision and might be able to negotiate more favorable terms in a market with increased inventory. When we look at the days on the market in East Tennessee, the average cumulative days on the market has increased significantly from 49 days in March of 2024 to 65 days in March of 2025. That's up 32.65%. The median days on the market has risen from 19 days to 34 days. That's up 78.95%, which indicates that properties are taking much longer to sell compared to last year. So the implications there are for sellers, the extended time on the market suggests that you may need to price competitively and focus on making your properties stand out to attract buyers quickly. Now, for buyers, they can take their time evaluating properties, maybe without the urgency seen in a hot seller's market. The sold to list price ratio, when we look at that, the sale to original list price ratio, this metric has declined slightly, which suggests that sellers are often accepting offers below their initial asking prices. However, the sale to list price ratio remains strong, hovering at around 98%, which indicates that properties are selling close to their final list price after price adjustments have happened. So the implications there for sellers, pricing a property correctly from the outset is critical, as overpricing can lead to prolonged market times and a need for price reductions. For buyers, you may have room to negotiate, but you should expect to pay close to the adjusted asking price for desirable properties. When we look at the price volume, active list volume has increased significantly, driven by the rise in inventory and list prices. This indicates a growing market. The sold volume has increased modestly, reflecting stable demand, even with increased inventory. So the implications here for sellers, while there's more competition, the increase in sold volume suggests that buyers are still active, particularly for well-priced and desirable properties. Now, for buyers, the stability in the sold volume shows that demand has not dropped significantly, meaning that buyers should still act decisively for high-demand homes. Conclusions: for sellers, increased competition, the rise in active listings means that sellers must focus on strategic pricing and marketing. There may be longer selling times. Homes are taking longer to sell, so sellers should expect extended timelines and adjust expectations accordingly. And there might be opportunities for quality properties. Properties that are priced well and in good condition continue to sell at high prices, as reflected in the increase in the median and average sale prices that we saw above. Now, for buyers, there's more options. Increased inventory provides buyers with a wider selection of properties to choose from. Negotiation power, the longer days on the market, and the declining sold to original list price ratio presents opportunities for buyers to negotiate favorable deals. But you must act decisively. While there is more inventory, desirable properties are still selling close to their asking prices, so buyers should act quickly on high-demand homes. Overall, the market outlook would be the East Tennessee real estate market is transitioning towards a more balanced market with increased inventory and longer selling times favoring buyers. However, demand remains stable and sale prices are rising, making it a favorable environment for both buyers and sellers who approach the market strategically. Sellers should focus on realistic pricing, while buyers can take advantage of increased options and negotiate better terms. Okay, let's take a look at the Knoxville, Tennessee market, which is anything with a Knoxville, Tennessee address. Let's take a look. Okay, compared to March of 2024, looking at March of 2025, home sales in Knoxville are down 12.3%. Pending sales in Knoxville are up 2.7% in March. The inventory of homes was up 43.3% compared to 1 year earlier, so quite a bit more inventory. New listings up as well, 14.1% higher than a year ago. The median sales price in Knoxville is up 4.79%, coming in at $400,000, with the average sold price per square foot in Knoxville coming in at $231 per square foot, with the absorption rate rising a little bit to 2.10 months worth of inventory, 2.10 months worth of inventory versus 2.05 the month earlier. So that is just telling us there's a little bit more inventory on the market compared to last month. Let's take a look at the data and what that means for Knoxville. Okay, so when we look at the number of listings in Knoxville, the number of active listings has increased steadily over the past year, reaching approximately 1,200 by March of 2025. This reflects a growing inventory of homes for sale. As far as new listings, the volume of new listings has remained relatively stable, indicating steady flow of properties entering the market. Looking at the pended and sold listings, both pended and sold listings have remained flat, suggesting that buyer demand has not kept pace with the growing inventory. So the implications here for sellers: increased inventory means more competition, so you will need to make your listings stand out through pricing, presentation, and marketing strategies. For buyers, you have more options to choose from, which strengthens your negotiating power. Let's take a look at the listing prices and sale prices here. The median list price increased slightly from $425,000 in March of 2024 to $430,000 in March of 2025. That's up 1.18%. This indicates that sellers are pricing properties conservatively in a competitive market. When we look at the median sales price, it has increased from $381,725 to $400,000. That's up 4.79%. This reflects a willingness among buyers to pay slightly more, likely for quality or desirable properties. When we look at the average sale price, it rose 6.21% from $449,813 to $477,733. That suggests that higher-end homes are seeing more activity or higher valuations. The implications here, looking at this pricing for sellers, is that while sales prices are increasing, the modest growth in list prices underscores the importance of realistic pricing to attract buyers. Now, for buyers, although sale prices are rising, the Knoxville market remains relatively affordable compared to national trends, offering good value. When we look at the absorption rate increased from 1.56 months in March of 2024 to 2.12 months in March of 2025. That's up 35.90%. This indicates a trend towards a more balanced market, though at only 2 months worth of inventory, it still favors sellers slightly. The implications here for sellers is that homes are taking longer to sell, so sellers should be prepared for extended marketing times. For buyers, you may have more time to make a decision and negotiate favorable terms in a market that is shifting slightly in your favor. But remember, on desirable properties in high-demand areas, I would not wait too long to make a decision because those are getting snapped up quickly. As far as days on the market, the average days on the market increased 21.62%, rising from 37 days in March of 2024 to 45 days in March of 2025. The median days on the market increased slightly from 14 to 15 days. That's up 7.14%. This indicates that while some properties are selling quickly, others are remaining on the market longer. The implications here for sellers: the increase in days on the market suggests that sellers need to be patient and focus on competitive pricing and property presentation to speed up sales. For buyers, they can take more time to evaluate their options without feeling rushed. Again, a caveat there: in high-demand properties, don't wait too long because you could miss out on it if you really want that property. Let's look at the sold-to-list price ratio. The sale to original list price ratio, so this metric has declined slightly, indicating that sellers are often accepting offers below their original asking prices. But when we look at the sale to list price ratio, this remains strong, hovering close to 98%, showing that properties sell near their final adjusted asking price, that is after any price reductions. The implications here, pricing properties competitively from the start for sellers is crucial to avoid price reductions and prolonged market times. For buyers, they can negotiate that initial price, but should expect to pay close to adjusted price, especially for desirable homes. When we look at the active list volume, the total volume of active listings continues to grow, reflecting increase in inventory and list prices. When we look at sold and pended volume, both of these metrics have increased modestly, indicating stable demand despite the growing inventory. The implications here for sellers is that the increase in inventory means sellers need to focus on creating compelling listings to attract buyers. For buyers, the steady sold volume shows that demand is still present, so buyers should act decisively when they find desirable properties. Conclusions here for sellers: there's increased competition. The rise in inventory means sellers need to focus on pricing competitively and ensuring their properties are well prepared for sale. They should expect longer selling times. Homes are taking longer to sell, so sellers should be prepared for extended timelines and consider offering incentives to attract buyers. And there are opportunities for quality properties. Well-priced and desirable homes are still selling close to their list prices and at higher price points. Now, what about the conclusion for buyers? There's more options. Increased inventory provides buyers with a wider selection of properties. There's more negotiation power. Buyers have room to negotiate, especially for homes that have been on the market longer. But they should act quickly on desirable properties. While there are more options, desirable homes are still selling close to their list prices, so buyers should act decisively. As far as the overall market outlook, the Knoxville real estate market is transitioning towards a slightly more balanced environment with increased inventory and longer selling times, giving buyers more leverage. However, the steady rise in sales prices shows that demand remains robust, particularly for well-priced and desirable homes. Sellers should focus on competitive pricing and property preparation, while buyers can take advantage of increased options and negotiate favorable terms. Okay, let's take a look at what is happening here in the surrounding counties. When we look at Roane County, available inventory in Roane County is up 24.5%. Pending sales in Roane County are up 39.4%. And the median sales price in Roane County is up 12.8% compared to 1 year ago, coming in at $370,000, with the median sold price per square foot in Roane County coming in at $194 per square foot. In Knox County, available inventory is up 45% compared to a year ago. Pending sales are up 6.1%. The median sales price in Knox County is up 6.10%, coming in at $400,000. And the median sold price per square foot in Knox County is coming in at $229 per square foot. In Anderson County, available inventory is up 7.4%. Pending sales are up 3.4%. The median sales price is down 4.99%, coming in at $332,500. That's the first time we've seen the median sales price go negative in Anderson County in as long as I can remember. So we'll want to keep an eye on that and see what that does next month. The median sold price per square foot in Anderson County came in at $201 per square foot. In Loudon County, available inventory is up 54.2%. Pending sales are down 10.4%. And the median sales price in Loudon County is down 6.57%, coming in at $469,000, with the median sold price per square foot coming in at $235 per square foot in Loudon County. In Sevier County, available inventory is up 20.1% compared to a year ago. Pending sales are down 2.3%, and the median sales price in Sevier County is up 2.08%, coming in at $510,000. This is the first time we've seen Sevier County in the green as far as positive median sales price growth in quite some time. So that could be hopefully an upswing for Sevier County. They've been trending down for quite a long time because we know Sevier County is full of investment properties. So when interest rates are high, a lot of times investment properties don't sell as well. So it's good to see that in the green for the first time in a long time. And as far as price per square foot in Sevier County, that came in at $276 per square foot. When we look at Blount County, available inventory is up 30.5%. Pending sales are up 11%. And the median sales price in Blount County is up 8.09%, coming in at $399,950, with the median sold price per square foot in Blount County coming in at $222 per square foot. Okay, that was a lot of information. Hopefully you saw what you needed to see. Also, in the event that you wanted to look at a specific zip code and see what was happening in a specific zip code, you can go to my website, 865realestate.com, and up on the top tab there is a section where you can search for the market statistics for specific zip codes in the Knoxville area. If you click on that, it'll show you all that data that I just kind of showed you earlier for each specific county, or just reach out to me and I will send you that information and or the link that is appropriate. Happy to do that for you. But I want to talk a little bit about what the data has shown in a very interesting and surprising data point that I came across. So data shows that of the 100 largest cities in the U.S., that Knoxville was ranked number one as far as price appreciation over the last 7 years, coming in at 98.13% price appreciation over the last 7 years. Knoxville, number one of the 100 largest cities. So why did Knoxville prices appreciate more than anywhere else? So to understand the reasons behind this remarkable growth, it's essential to consider various factors that have contributed to it. So what are some of the factors that contributed to Knoxville's home price appreciation? Number one, relative affordability. Historically, Knoxville has been considered an affordable city compared to other major metropolitan areas in the U.S. As housing prices in other cities have risen, Knoxville's relative affordability has attracted buyers looking for more value for their money. Number two, growing economy. Knoxville has a diverse economy with a mix of industries, including healthcare, education, technology, and manufacturing. The city is home to the University of Tennessee, which is a significant employer and driver of economic growth. We also have Oak Ridge very close by and everything that is happening there. So it is a strong economy and it attracts new residents and businesses, increasing demand for housing. Number three, quality of life. Knoxville offers a high quality of life with a mix of urban and outdoor recreational opportunities. The city's scenic beauty, with the Tennessee River running through it and its proximity to the Great Smoky Mountain National Park, make it an attractive destination for people looking to relocate. Number four, revitalization and urban development. Downtown Knoxville has undergone significant revitalization efforts with new businesses, restaurants, and entertainment venues opening in recent years. Speaking of that, the new baseball stadium, they're getting ready to kick off their season, and it's a very exciting thing happening down in the old city. So a lot is happening downtown. This has made the city more attractive to young professionals and families, increasing demand for housing. Number five, migration trends. The pandemic accelerated a trend of people moving out of larger, more expensive cities and states to smaller, more affordable ones. Knoxville benefited from this trend as people sought out a more relaxed pace of life and lower costs. Number 6, low inventory. Knoxville, like many other cities, has experienced a shortage of housing inventory, particularly in certain price ranges. This limited supply, combined with increasing demand, has driven up prices. Number 7, interest rates and the mortgage market. Although interest rates have fluctuated over the past 7 years, the overall trend has been towards historically low rates, making it more affordable for people to buy or refinance homes. This has contributed to increased demand and subsequently higher prices. And number 8, demographic changes. Knoxville's population has grown, driven by an influx of retirees and young professionals. This demographic shift has led to increased demand for housing, particularly in certain neighborhoods and price ranges. So in summary, Knoxville's remarkable home price appreciation over the last 7 years can be attributed to a combination of factors, including its relative affordability, growing economy, quality of life, revitalization efforts, and demographic changes. While other cities have also experienced growth, Knoxville's unique blend of characteristics has positioned it as a top performer in terms of home price appreciation. So, where will Knoxville home prices go in the next 5 years? Well, to forecast Knoxville's home price appreciation over the next 5 years, we've got to consider some factors that may influence the housing market. So, what are those factors? Well, number 1, let's look at current trends. Knoxville's housing market has been strong, like we said, with a 98.13% appreciation over the last 7 years. This trend is expected to continue, albeit at a slower pace. Second, we need to look at economic growth. The Knoxville economy is expected to continue growing, driven by the healthcare, education, and technology sectors. A strong economy will likely support more housing demand. What about housing supply? Knoxville's housing inventory has been relatively low, which has contributed to price appreciation. If inventory remains limited, prices may continue to rise. And interest rates. Interest rates are expected to fluctuate over the next 5 years. Higher interest rates could slow down housing demand, while lower rates could stimulate it. So that's something we definitely need to keep an eye on. And demographic trends. Knoxville's population is expected to continue growing, driven by its attractiveness to young professionals, families, and retirees. We can look at predictions from other sources, such as Zillow. What does Zillow say? Zillow predicts that Knoxville home values will appreciate by 14.1% over the next 5 years, with a forecasted annual appreciation of 2.7%. CoreLogic forecasts that Knoxville's home prices will rise by 16.3% over the next 5 years, with an annual appreciation of 3.1%. The National Association of Realtors predicts that Knoxville's housing market will remain strong, with a moderate appreciation rate of 2 to 3% annually. My prediction is that Knoxville's home values will appreciate by 14 to 20% over the next 5 years, with annual appreciation between 2.5% to 4%. This forecast is based on a combination of historical trends, economic indicators, and demographic factors. But there are risks and uncertainties that you need to keep in mind when you look at forecasts. Number 1, economic downturn. A recession or economic downturn could negatively impact Knoxville's housing market. Number 2, interest rate volatility. Significant changes in interest rate could affect housing demand and prices. And third, housing supply. An increase in the housing inventory could slow price appreciation. While Knoxville's housing market is expected to remain strong, it's essential to monitor economic and demographic trends to adjust expectations accordingly. All this to say, if you are expecting to wait until home prices drop in Knoxville before you jump into the market, you may be waiting a long time, because as it looks right now, all indicators point towards prices continuing to rise in Knoxville. So now may just be the time, as we are entering the spring season and we see through the data that we just looked at that there might be more opportunities now for buyers with increased inventory and more possibilities for negotiation. So if you have any questions about this, don't hesitate to reach out to me. Oh, one last thing. We talked a lot about interest rates. As of today, they are right around 6.8%. They've been very volatile lately with some of the things going on with economic news, but also remember to keep an eye on that. Any questions at all about the market, about buying a home, about selling a home, about interest rates, you name it, don't hesitate to reach out to me. This is Troy Stavros with Cornerstone Realty Associates. I hope you're having a great day, and I will talk to you soon.